Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, May the 1st, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. We have two main hypos, which are our trade plans for the market in general. We do not know what the market's going to do. Therefore, we wait for the buyers of the control or the sellers to take control, and then we execute the plan that best suits the market. We also have two alternative hypotheses, Hypo 3 and Hypo 4, sometimes a fifth. And we do that for expansion days or trend days. And again, as I mentioned the other day, we've been seeing more and more of our Hypo 3 and 4. And yesterday, we almost saw 5, kind of get a hybrid of 4 and 5 from yesterday. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything here live in the go-to, and then we do live trading analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and the trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, your own risk metrics. Man, how many times have I said that little spiel? So let's take a look at yesterday. Yesterday, we were actually looking for a continuation day. We were looking for an open auction out of range, a push down into testing the value area high or the 69 area, finding buyers and then rotating us up. Hypo 2 was the opposite, where we failed between the 80 and the 83 and rotated into the 69 and went sideways. What we got was a combination of Hypo 4 and Hypo 5, where basically we opened auction, we failed to get above the 83 area. That was our weak open at 83. They rotated us down, and we did not stop at the 69. We halted in around that 57, and we went sideways at 57, where that microcomposite VPOC was before the shift up on Friday to 69. And then we got a late day probe down towards the 45, but we did not break it. We did get a shift of the VPOC down. We had put in a very weak low. We were expecting continuation based on this pattern, this formation. In the globex, they did extend the globex down, but they only got down to 41 area in the globex. And you can see we still did not break the daily average true range downside or upside target yesterday. And that's what we've been talking about. These large 20 period daily average true range are still running. Today, the daily average true range full session is running at 41.85 points. So a lot of area to be able to move the market without going into range extension. Looking at the earnings, earnings for the day, we had so far this morning Shopify, Pfizer, Seagate, Under Armour, Aetna, Merck, BP. They're all, still seeing a lot of beats. A couple misses with lumber liquidation, but they're in serious problem no matter what. Grubhub, but Scott's. But for the most part, it's still really good. After the market today, we've got Apple. That's going to be a big one, and Snap. Snap is still that recent IPO. Juniper, Frontier. So we got some names coming up tonight. Looking at the economic calendar, don't think we have a lot today. We do have the Fed tomorrow. So we do have an FOMC day tomorrow. So we could get a move early today and then sideways consolidation waiting on the Fed announcement. But we do have a couple things that could move us. not the red book. It comes out in 4 minutes, but we've got 54 minutes manufacturing PMI at 9:45, and then the big one, of course, would be today at 10 o'clock with the ISM manufacturing PMI and everything that goes along with that. 10:30, we've got Dallas Fed and Texas Services sector outlook, and then 11:30, we've got the 4-week bill auction. We've got the Canadian Bank of Canada Governor Pelosi speaking at 2:30, and then we've got all car sales and all truck sales during the course of the trading day, and the total vehicle sales coming out today. And then just remember that tomorrow, we have at 8:15, we've got the ADP non-farm employment change. We've got the non-farm payroll coming up later in the week. We've got the crude inventory, but the big one again, like I mentioned, is going to be the 2 o'clock FOMC statement and the Fed interest rate decision. And we're likely looking at another small rate increase based on their prediction of 4 rate increases. Each morning I like to just do a very simple exercise, and basically all I do is I take a simple candlestick chart. I start on a monthly. I use a 9 EMA and a 20 SMA, and what I'm looking for is I'm just seeing where we are in terms of the different time frames in terms of the trend. Do we have good slope and separation? Is price paralleling the 9 nicely, or are we challenging the 20 or violating the trend or a possible trend change by breaking above or below the 9 and the 20? Monthly, still trend very much intact. 14 months of one-time framing up. February, we violated the one-time framing. We had an inside month in March, a doji in April, and now we start May, and we're sitting right on top of the 9 EMA. We're losing some slope, some separation, but the trend itself does not get violated on the monthly. And this is important to understand, because any pullback, even into the 2400s, okay, is not a real big deal. It's a normal part of the auction, and it's not the sky falling and the start of a recession. Could it be? Sure, it could, but it's nothing in terms of the bigger picture trend. Going to the weekly, as we mentioned, we are seeing the possibility of a trend change. We're below the 9 and the 20. We're failing to get back and hold above the 9 and 20. We closed as a negative month last week, and so far this week we've opened and failed to hold above the open. The open of the week is 26.70.50. Remember that that is also going to be the open of your month. So your month open and your week open is 26.70.50, and we're below that right now and seeing a possible start of a downward trend on the weekly. On the daily, you can see that we're still in this symmetrical triangle. We're in this consolidation, but we are seeing this step down, consolidate, step down, consolidate, and we're seeing the possible move. And we should start seeing that on the intraday 4-hour. Okay, you can see we've broken below the 9 and the 20, and in that downward trend yesterday, and we're getting slope and separation to the downside and possible trend in the intraday. And going to last but not least, the 30-minute. In the European session, we basically going sideways and consolidating down here, but we're still below the 9 and the 20, and we have no slope of separation in either direction, and we're seeing consolidation. So taking a look at the structure of the market, and again, always good to just tell the story, narrate the story, gives you the context of where we are. We had this long upward grind trend into new all-time highs, put in an unequalized high at 28.83 and a quarter in the globex, all-time high in the RTH 28.80 and a quarter. Tried to hold value up at the 28.32.75, fell out, came all the way down into this old microcomposite VPOC in around the 39. Take note where we're trading. We found buyers down at the 29 in the globex. They rotated us up, tried to break back up, failed to hold the 2800s, and then we came back down. And all we've been doing, okay, since is going back and forth in this large value area that runs from 27, 25, 75 down into the 2600 area. The microcomposite VPOC did shift up. It was at 57 and a quarter, and it moved up to 69 on Friday, where we put off a lot of volume at that 69. And so we did get a shift, but yesterday they were unable to hold that 69. We told, we talked about this yesterday, that we needed to hold that 69, accept that price move higher. If not, we'd likely rotate back down to the 57. We did that, and then we pushed lower. One thing I want to point out is the fact that we've got this little area right here of high volume, okay, at the 46 area, 46. These 2 days, we found our buyers at 33. So if we cannot get back above that 46 area, the 33 is going to be the primary target today. And if I move this profile over, you can see that that 69 area, the sellers still came in strong yesterday at that 69 area and pushed us and continued to push us down into that 57. And we paused there, and then we pushed through. And you can see that on both the 5-day and the 3-day, the volume came in at the 46. So we're going to be watching that area very closely, especially because of the fact that it's the low. The volume area, value area for the last 5 days, low is also down in that 33, 34 area. So we're going to be watching that area and targeting that area if we fail to hold and get back above that 46 and stay inside of the prior day. 33 will be our key target below. Our key line in sand below is this 1850, very prominent CLVN and microcomposite LVN, with the next big destination being the value area low down here at the 12 area of this profile that runs from the breakdown day on March the 22nd, when we came back into this this value area. We gapped down from that 3-day where they tried to hold value. Anything below the 18, you're targeting the 12 and the 05 and of course, the centennial number. And then the next big destination below that is going to be back down here in this prior microcomposite VPOC and the CHVN here at the 2586. The longer time frame, if I draw a profile all the way, I'm going to do it so you can see it, all the way from the gap up, which is right here, to today, you can see that the microcomposite VPOC, okay, shifts down, or the most traded price when we go from the start of this whole rally up. Okay, the most traded price is still down here at the 86 and a quarter level. So if we do not hold the 2600, that is our next big destination below, and we'll likely get a bounce off of that the first time we get down there. Taking a look at the overnight inventory, we've got a pretty balanced inventory. We opened auction. We got the continuation lower that we were expecting from the shift of the VPOC and the bluntness and the volume that went off at that 46 area. Got the continuation down to the 41 and a quarter. Didn't get below the CLVN at the 40 and a quarter. Rotated us up all the way. And I love pointing this out, and I'll point it out every time. Notice what we see at the high is a FUBAR Mr. Sneaky Tech Gap, my favorite trade setup. Not going to get into the details, but you in the live room know that this is the #1 trade that I take every time. And what do we get? We get a nice rotation back down. And we're putting in a bit of a weak low down here. But again, the key area to watch is at 45, 46. It's also our globex VPOC, and we just shifted down in the last hour or so down here. So starting to move. Inventory, I would say, is about 60% net short, but it's pretty balanced. So in terms of levels, our overnight low I've already moved over. Our overnight high is up at 53.75. Our VPOC could shift, but I'll put it in for the time being. It's not going to shift far. It's going to be either here at the 45 or here at the 45.50. We do have a naked close that is still open. It did not get taken out. The gap is still open. It got taken out in the globex, but it's still valid until it gets taken out in the RTH session. Our daily average true range 20 period full session is 41.85. Based on that, our downside daily ATR target is down here at the 26.12. Remember, that is also the microcomposite value area low and a key target below our key line in the sand at that 1850. And then our daily upside ATR target based on the overnight low is all the way back at that 83.25, and that was just one tick above last week's open. So we have range capabilities, and I always talk about this so that you never forget. Don't be surprised when we can go up or down into these extremes without breaking the 20 period average true range. Now, what are we expecting? We are seeing weakness coming in. I am expecting a bit of a move down into the 33 area. We also have a naked VPOC down here at 32.50, and then there's a virgin POC. What's the difference between a naked VPOC and a POC? A POC is time, virgin time. If we go back and we look at the microcomposite, the virgin POC, there's two of them. There's one here and there's one here, but we're watching this one right here because it's continued to be naked at 29.50. So that's a target. And then we only left one single from yesterday, which was surprising. We left it at 49.50. So if we hold the 45 area and get back inside of yesterday's range, 49.50 is going to be our main target above. All right, so let's take a look at our hypothesis. A lot of stuff going on here. I realize that, but hey, I don't make the market. I just follow it. In terms of hypotheses, I'm looking for an open auction out of range. I'm looking for a move up into that 47 to 49 area, finding sellers from somewhere between the 47 and the 52, rotating us down through the overnight low and pushing down into this area right here around the 32, 33. It's also around April's open at 26.35, and basically consolidating down here, going sideways into tomorrow's Fed announcement. That is hypo 1. Hypo 2 is a open auction out of range, a push down into the 40 area, maybe a probe down into the 33, but somewhere between 40 and 33, 32 area, looking for buyers to rotate us back up into the prior day range, close the gap, take out the naked VPOC, and push up into the 49.50 and basically fight the low between the 42 area and the 57 area and go sideways, closing somewhere between the low of yesterday and the 57 area going into tomorrow's Fed. Hypo 3 is going to be a gap and go day. Gap rules will apply. We're not going to have a huge gap, but right now, if we open up here, say at the 42.50, and our close was 47.25, Our half gap fill is going to be 44.75. And that's approximate. Oh, that's the wrong one. I didn't want that one. Got so much going on in this area. Again, this will have to be adjusted on the open. And because it's such a small gap, I wouldn't be looking for the half gap fill. I'd be looking for the gap fill itself, especially with the naked VPOC. So our hypo 3 is a gap and go day, open auction out of range, failure to close the gap, come up into the 44, 45 area, fail from there, and then rotate us down into this 33 with a late day probe down to test this 18, find buyers, rotate back up, and close somewhere in around this 27 to 33 area and go sideways into the Fed. That is hypo 3. Hypo 4 is a take back day, open auction, take out the overnight low, find buyers down here. Same thing as hypo 2, but coming up and pushing through to the 57. Okay, finding acceptance at that 57 again, maybe even a microcomposite VPOC shift down to that 57 area, and then a push up into the 69 to 70 area and come back up here and chop in this low distribution zone and go sideways into the close with a close somewhere around that 69. That is hypo 4. There is a fifth alternative where we have a very small range, a 9-point to 10-point range, and we basically fight the low and chop between the 35 and the 45 and just fight this low and go sideways. And that would be my alternative hypo 5. Taking a look at gold. Gold broke our key level that we were talking about. We were talking about not holding this 19. If we didn't hold the 19, our main target is right here at the 1306.40. They're coming down. The low so far today is at 1307.30. I'm expecting it to push through down here, test the 1300, and probably just chop around here going sideways into the Fed. Don't forget, if we do not hold that 1300 level, that the composite, the most traded price going all the way back to October 24th, 2018, or 2008, I'm sorry, 10 years, almost 10 years, is down here at the 1290.80, adjusted for the current contract, of course. But this is our next big destination if we cannot hold the 1300. I think, if we don't bounce off of the 1306, the 1304 area, you will see it push down into this 1290 either this week or next week. But again, I'm anticipating, I'm not calling. It's just the natural auction. We've gone back out. We've fallen out of balance. We've gone into price discovery. We're advertising price to the buyers. They have not found the buyers yet, and they're likely to push and continue to push down towards that 1290.80. Key levels to keep an eye on today, obviously the 1306.40. If we don't hold that, look for them to push to the lower side of that balance and test the 1304. Anything below the 1304, 1300, and then below a liquidation. If we can hold the 1306, we get a bounce. I'm looking for them to rotate back up into the 1318 area and come back and test up the key level that we just broke and failed to hold above. So that's what I'm looking at for gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.